Thank you for being here today. We've got Greg Martin from Think Safe Insurance to help us about mobile home insurance. So not only the insurance problem in Florida, but then you put the next filter on as mobile homes and it becomes a bigger challenge. And I'm sure he's gonna let us know a lot of that. Uh, we use Greg for most of our mobile homes. I personally self-insure a lot of our homes that we buy, so we can buy them if they can't qualify for insurance. But whenever I say self-insure, I still mean I get liability insurance. We get that regardless of anything. Again, we use Greg for those as well. And then the ones that can qualify for insurance, we buy those and then we get, I mean, Greg will fill us in, but I think we're using Citizens actually for a lot of those right now, which I was kind of
Mhm.
shocked that they were the cheapest. I hear all my other friends complaining about them. Like, I don't know. I'm actually not very upset with my rates. I'm not
Yeah.
gonna. It's not the most fun to get through it to actually get it approved,
Right.
but and my rates even went down this year by a few dollars, enough to buy lunch, so that was nice. All right, I'm gonna stop rambling about this. Greg, I'll let you take it away. Tell us about insurance and mobile homes.
Yeah, absolutely. Let me start sharing my screen here. What you said about citizens is absolutely true. It's always interesting. Um, Owner occupied though is very different than landlords. With landlords, a lot of times they're half price of a lot of the market ones. That's just because of some regulations that were put in place a long time ago. Those are going to slowly go up. Like if you look at their deck page, they'll have like our rate is 2,600 and you have a statutory cap of $600 credit. So your rate is, 1,800 or 2,000, whatever. I forget what the numbers were that I used for the example, but you're already under what their rate is and it's going to slowly go up to the normal rate. So that's going to happen a lot with investor products with them, regardless of mobile homes, regular single family homes, anything like that. So we'll see that for a while, but for the time being, a lot of times their rate is half price of what you can get anywhere else. So um, that's good. Can you see my screen there, Clarissa? Perfect. Okay. So a little bit about me. I have worked in insurance since 2006. I worked for Liberty Mutual in their national office, handling insurance all over the country. And then I opened Think Safe Insurance in 2020, mainly to help my investor friends here in the Central Florida area. And then that's when I learned that Florida insurance is its own little world, and Miami-Dade is its own little world of Florida. So it's been a fun adventure on that. When I'm not talking about insurance, I like to kayak, disc golf. I like to go to concerts. So I'll be at work tour this fall if anyone's going there. And then today, like Adrian said, we're going to talk about everyone's favorite topic, right? Insurance. Yay! I know it's not a fun topic, but it is something that obviously is critically important in the real estate space. Whether you're an investor, an agent, working with buyers and sellers, everyone needs to be aware of insurance and some of the things that may come up and cause problems for your deals. Um, since we're focused on mobile homes today, I wanted to talk about a few of the challenges that come up in mobile homes that some of them are similar to the single family challenges and some of them are a little bit different. Two of the biggest carriers that we used to always use and that are well known across the whole country for mobile homes are Foremost and American Modern. Both of those carriers stopped writing insurance with Florida probably 2.5 years ago or so, and they are doing a lot more non-renewal. So a lot of customers that had those existing policies weren't dropped back then, but they're starting to get non-renewal notices now. Time will tell what they plan to do with that, if they're going to be coming back into the market or dropping out altogether. But right now, they're still reducing their exposure here in Florida. Occupancy on mobile homes can make a big difference. We'll talk about that a little bit more in another slide, but whether it's owner occupied, tenant occupied, or vacant will greatly impact how many options a customer has for their insurance. And then also older mobile homes can have some construction features that make it more difficult as well and limits the options regardless of your occupancy. And financing can also be another challenge depending on lender requirements. So we're going to look at each of those things here. coming up over the next few slides, and then we'll definitely leave some time at the end for any questions that you may have, so we can touch on things that have come up that you may have seen. So occupancy, so you're owner occupied. If you have a buyer that's owner occupied, that's going to be the one that has the most insurance options. Um, it's already going to be less options than your single family homes, but most companies that do mobile home insurance will do it if it's owner occupied. They like that. There's someone there to, turn off the water if it starts leaking or put out the fire if it catches on fire. And because of the owner, they actually care about the place and will keep it up a little bit more. Long-term annual rentals have a few options. Like Adrian mentioned, Citizens is primarily where most of those go. Um, they have requirements for inspections and things like that, which we'll touch on in a few minutes, but their rates are really competitive. One of the things to be aware of with Citizens, though, is this isn't just mobile homes, but with any policy with them in 2027, they're going to require flood insurance. That's going to be regardless of whether you're in a high risk flood zone or not. And that's if they don't change anything. So time will tell. Maybe they change something on that. But as of right now, they're going to start requiring flood insurance.
And what year was that?
2027. So they brought
Oh,
that in slowly over time. Like the first year they did it, I think it was homes that were 700,000 and up. The next year it was 600,000 and up. The next year 500. This year's 400. I think this year's 500. Next year's 400,000 and up, and then 2027 is everyone.
wow.
So again, that's plenty of time for people to complain and the government to change their mind on that. So it's not set in stone. There's already been 3 or 4 changes to the requirements with condos and with contents coverage and stuff like that. So it may change, but just something to keep in mind as we're looking at different options over time there. Vacant manufactured homes, there's not a lot of options for those. I do know of one carrier that will do it if it's pretty much ready, like just on the market to sell, but there's not a lot of renovations. Like they might allow it if you're painting or something like that. But if you're doing anything hardly at all, it doesn't have to be structural for them to shy away from it. Like I think one of their questions is if you're replacing cabinets, and if you're replacing cabinets, they don't want to touch it. So under renovation, I don't know of any options, and I actually asked the carrier that does the regular vacancy, so they don't know of any options for renovation ones either. So something to be aware of if you have deals that are going to be like fix and flip, investors that do fix and flip and they think they're going to get into mobile homes. It's fine if they don't have insurance requirements, but if they're going to require insurance, that may be something they want to check on before you get into a long contract and take up a lot of the seller's time. If they're going to run into insurance option or insurance issues on it. So those are kind of the basics on occupancy, and owner occupied will have most options there. Financing, like we talked about, is another issue that comes up sometimes. Lenders often, at least on the retail side, a lot of lenders have replacement cost requirements on your loans. And a lot of carriers, if the home's older than 1994, they won't do replacement costs. They only do actual cash value that's going to depreciate it based on its age and condition, things like that. So it's hard to get the coverage limits that the lenders are requiring. So if you have FHA, something like that, that's going to require um, replacement cost on a mobile home. There's like 1 or 2 companies out there that I know that do it, but it's very expensive for replacement cost on those older ones, like usually more than what a regular single family home would cost if they have the normal full requirements. So something to be aware of there. That's why it's great to have connections with cash buyers that don't have the same insurance requirements as your traditional lenders, like Adrian, who also know, how to get around some of those issues with lending and finance requirements. Okay, so inspections, like with Citizens, like we talked about, they do require 4-point inspections. You're probably familiar with these on your single family homes. They're going to look at the roof, the electrical, plumbing, and the HVAC system. I get questions a lot of times on 4 points, like what are they for? This is going to assess the eligibility of a property. It doesn't have anything to do with the rates directly. Like there's no discounts from a 4-point inspection or anything like that. It's going to look at like what type of plumbing you have, whether you have copper or PVC or polybutylene, those types of things, what kind of roof you have, how many years of life are left on it. Those are going to be the main things it's looking at in those four systems. And they want to make sure everything is in good condition and it's not uh, material that is known to cause issues. Those are usually good for a year or two. Some companies are a little bit less, but most of the time they won't take it longer than that because something may have changed. You know, we had the hurricanes last year. If you had a 4-point inspection from July of last year, you know, even though that's less than a year, the conditions may have changed from those storms. So that's why they don't have a long period on that. And it determines the oh, go ahead.
I was just gonna throw in one piece here on the plumbing, and maybe you're about to cover it. We have found from the 4-point inspections that little cap that goes over the water that comes in. It personally I think is a little silly because we can just put a plastic one there, but they like to see that. So now we're just going ahead and they don't even want to see it rusty or anything. So we're just buying the plastic one that slides right over it. Again, I think it's silly that, but they want to see it. So we're just putting that nice shiny plastic one right over the little hole there so that they're happy from the pictures that they see in the 4-point inspection.
Yeah,
And you've
all of
given
that's
us great
kind of
feedback on that. Hey, you might want to take care of this early.
yeah, all of that is somewhat subjective depending on the underwriter that you get. And then on the 4-point, as long as everything is satisfactory, and then 5 years of life left on the roof. Those are the main items, and we'll look at that here in a minute as well. Um, but yeah, anything like that that's small that you can fix before we turn it into underwriting is always helpful because they'll look at the picture and then suddenly they'll pull it up and they'll, want some type of proof of repair. And then, I think we had one of them where they wanted a plumber to do something stupid like that. So they're like, we want a paid invoice from a licensed contractor. It's like, come on, it's sliding this little thing on. What are we talking about? And, it just makes your life easier if you can clean some of those things up before they actually see the pictures and start asking questions. So the 4-point inspection, as you may know, it answers a lot of questions too. Like people don't always know what kind of plumbing they have, what kind of electrical wiring, things like that that can impact the eligibility. Like I always hate when we don't have these and we start talking about a policy like, oh, this is going to be a great policy for you. And then they turn in their 4-point inspection. And then it turns out, oh, your water heater's too old, or oh, you have 3 years of life. The whole thing we've been talking about on your new policy is not eligible now because of some condition that we didn't know about. So it just helps to have that up front, and it is important even on the manufactured homes. This is something specific to manufactured homes, obviously, tie downs. That's something that most of the carriers, if you're getting wind coverage, they're going to ask if you have tie downs up to the latest codes, and they'll put the statutes in there. Um, Obviously, most buyers aren't experienced with this. They don't know the tie downs. They don't know if it's up to code. They rely on the inspectors. And a lot of inspectors that I've talked to can't do tie down inspections or they can't say what code it needs. So having an inspector that knows how to do the tie down inspections and is familiar with that and is willing to do it is definitely helpful. There's usually not any documentation that the insurance companies require on that, but they do ask and you do sign it on the application. So, if you sign it and it's not legit and you have a claim, it's kind of opening up a potential issue that gives the insurer, way that if they don't want to cover something, it kind of gives them an out. So we want to eliminate that as much as possible. Try to verify that it does have the tie downs up to the latest codes, and having those good connections of people that know how to do that is always helpful. Age and life of the key systems. Again, we touched on this a little bit. Roofs need to have 5 years or more of life left. Um, like homes, some of the panels, Federal Pacific, Challenger, and Zinsco can be issues with a lot of the carriers. The ones going to Citizens, they don't have restrictions on these as long as the 4-point inspection is marked as satisfied or satisfactory. I have seen some inspectors that say some of these panels are recalled, so automatically it's unsatisfactory even if there's no problem with it. So it depends on what the inspector will write there. As long as it says satisfactory, no issues with it. Citizens will take those, but a lot of times the buyer doesn't want to be limited just to Citizens. So if that's something that can get fixed beforehand, that can help. And those just have. I'm not inspector or professional on those, but I know that a lot of these have fire risks. So like either the breakers don't trip, different things like that that cause an increased risk, and that's why the insurance companies don't like those. permits. I know me and Adrian have found this a few times. So the roofs, the carriers a lot of times want to see the roof permit, but some counties, like Hillsborough County, we came across, wasn't issuing roof permits. So with that, it has to get submitted to underwriting for review, and then they'll look at the pictures and they'll determine if they're going to take it or not. Even if the inspector put 10 years of life left, they go, cool, we don't have a permit, so we're going to make our own determination. And it's kind of up to what underwriter you get. Sometimes they're lenient and we don't have a problem. And then every once in a while, they'll come back and say, no, we don't like this one. We're not going to take it. So then we have to have a backup plan on that. So if you're if you have a home already and you're replacing a roof and you can get a permit, always get the permit if you can. That way you avoid that issue if you ever go to sell it or if you ever go get insurance on your
I'll
own.
throw I'm going to throw in there a little bit more details on the challenge that we had is the roofer, licensed, insured, regular roofer, pulled the permit in Hillsborough County, but could never actually close it because you don't pull the permit on them. And that's what the insurance saw. And they're like, well, there's an open permit. And then you had to go back and forth between us and we had to I can't remember exactly what, I think the roofer had to go and just remove the permit
I
or get it
I
closed. I don't
think
know. We had difficulty because of that.
I think Hillsborough said we never should have issued this because we don't do
Yeah.
permits. And they ended up either deleting it or closing it like unfinished or something. And then it went to underwriting and underwriting gave us the approval on that one, if I recall
Okay.
correctly.
So it caused an issue, but because it was trying to do it the right way, quote unquote, even though that was actually the wrong way in Hillsborough County.
Yeah. So that is, hang on just a second here. Let me see if I can close this. Okay, then current insurance market. So this was something that I wanted to touch on a little bit. The single family homes and landlords on single family homes has been improving with more availability, more capacity, more carriers willing to write coverage since the reforms in 2022. Unfortunately, so far that hasn't carried over to manufactured homes. So again, American Modern and Foremost are reducing the policies they have in the state. The carriers that have been operating here don't seem particularly interested in expanding their capacity or starting to offer like occupancy or different things that they weren't offering before. We had the state insurance convention last week in Orlando, and that was one of my questions for a lot of the carriers was, hey, Foremost, are you going to be coming back and opening anytime soon? They said, no, we're still doing non-renewals. We don't foresee when that's going to happen. Send us motorcycles. I'm like, okay, we'll send you motorcycles, but nothing on the mobile homes in the foreseeable future. Another carrier that does homes and manufactured homes said, we're not looking to expand mobile homes. We're looking to expand single family homes right now. And a lot of this is not necessarily the carriers directly, but the reinsurance. So a lot of Florida companies rely on reinsurance, which is like their insurance policy. They'll have a certain amount they're responsible for, and then anything over that will go to these big, like global investment companies that do what's called reinsurance. Those companies don't really want to pay claims. They just want to give these companies a piece of paper that shows they're financially stable. And so they don't like seeing a lot of mobile homes in a company's portfolio. So that, from what I've understood, is why a lot of that's cutting back and why they don't have the same coverage options as they used to. And that does get affected by more than just Florida. Like they were talking about the California wildfires impacting reinsurance rates because it's a global market. So then when Florida carriers have to go buy their policies, they look at the risk overall, not just in Florida. So it affects what they have to pay for their coverage. So hopefully that will turn the corner and start giving some more options. But for the near future here, it doesn't look like that's going to be the case. And I think those were my main topics. I know insurance is always a hot button issue with usually lots of questions. Do you guys have any questions that have come up, either manufactured home insurance, buyers running into problems, anything like that that we can touch on for you there?
I live in a manufactured home and my insurance it's pretty affordable, $1,300 a year. But how I have a couple of questions. How do you recommend a potential homeowner to handle a non-renewable letter?
Non-renewal letters are tough. You don't want that to happen. Obviously, some of those carriers are reducing their coverages. And so I think it depends on how much notice you have. So if you have a lot of notice, it's good to, be aware of it, but not really start shopping till you get a little closer to it. Like Citizens will only give us quotes 30 days in advance. Some companies will give you a little bit more, a little further out. So I say usually like 45 days to 60 days prior to the renewal is the best time to start the process of shopping. Um, a lot of times when the companies are reducing their risk, it's some of it comes from they can't raise their rates. So talking about homeowners companies back in 2 years ago or so, a lot of them went out of business, probably like five or six of them went out of business. And when we started seeing their policies, their rates were way under what the market rates were. So shopping earlier, you might get a new policy, but it might be way more expensive, or it may be with a carrier that is less desirable than, say, Foremost or American Modern, where you have, a nationally known company that really specializes in manufactured homes. If they're saying they're going to non-renew you 10 months from now and you can keep it for another 10 months, I would do that and then start shopping 45 to 60 days prior to that non-renewal date.
Thank you.
I have a follow-up on that. If there isn't short answer for this, what do you think is going to happen if, I mean, what I guess the Citizens will technically still take people, but they take people and they have a $500,000 flood insurance and they truly just can't afford it. Like they're not, and they still have a loan, so they can't go without it. Like, what's the mortgage company's gonna say you have to have it when technically then they can't afford it, and they're even though they don't have to re-qualify for their debt to income. But like, I feel like that's gonna cause a huge issue in the state.
it it can, which is why I am so like 10 to 12 years ago, I think it was when they put these regulations in that caused that glide path and the caps. So what that did at that time was Citizens could only raise their rates 10% per year. So that's, and it was because, hey, we have a lot of senior citizens on fixed incomes. Like we can't have 40% increases and then afford their housing. It sounds good. And when all the other carriers only need a 9, 10, 11% increase, a 10% cap for Citizens, not a big deal. Now you have a few years like the last few years where companies go, cool, we need 40% increase. And Citizens goes, yeah, we need a 40% increase too, but we can only do 10%. You do that a few years and you end up where we are now, where their rates are like sometimes half price of what their
Mhm.
regular rate would actually be. So sometimes those fixes solve the surface level problem, but they don't solve the root
The deep.
cause
Mm.
issue. So I was talking to somebody that I think was pretty knowledgeable on this issue. It was 2 years ago now, I think. And I said, hey, we're trying to get insurance affordable. Why are we putting this requirement for flood insurance in place? And the answer I got was twofold. Number one is when the hurricanes come, a lot of times there's debate between whether this was flood damage or wind damage. And they said because the person had insurance with them and no flood insurance, they didn't want to fight it and they paid it. To which I say that doesn't help. Like those of us that aren't in areas that are impacted by flood, like if you're paying claims you shouldn't pay, you're having to adjust your rates for claims that you shouldn't pay. So you're hurting
Mm.
everyone else by being like the good guy that covers things. And I don't say that like obviously we want everyone to get things taken care of, but sometimes we forget that negative impact on all the other people that are also impacted by that.
Yeah.
Um, so it was that. I think they're going to try, if it's debatable, to try to push it more to the flood insurance and make flood insurance take responsibility for it. And then the second one was they said, hey, maybe if you add $400 or $600 or however much it is to our citizens' rate, now maybe they'll choose a different carrier. I don't know if I buy into that because if I could get homeowners and flood for 2,000, or I could just get homeowners for 2,000, I'd get homeowners and flood.
Yeah.
So I don't know if that's the case, but I think that was part of the logic. Hey, we can't raise our rates as much as we need to. So if we build in this additional cost, maybe it'll turn people a different direction.
Interesting.
And I think that
Okay.
was an off the record conversation, so I
Yeah.
won't say who it was with or what the case
Yep.
was. That was just what I heard along the way somewhere.
Yeah. And it's one reason I love you. You have, I feel like a lot of those, and you're not afraid to actually call and push back on some of the terms. I know we've had some conversations about that on some stuff that we felt was breaking fair housing, and you pushed back and they replied, "Oh, we didn't realize that." Well, yeah.
Yeah.
Jeremy, if you have any questions, feel free to unmute too. And I know you came in a little bit late. We're gonna send out the
Yeah,
replay as well.
working from home today, and I apologize for being late. I swore I wasn't gonna be, and then I looked down and I was like, oh, I already missed it. So, and if you guys don't have time to answer the question, Greg, please indulge me and forgive me a little bit here. If
Sure.
especially as I'm walking in, as it's almost over. If you had like 3 key takeaways that you would want somebody to walk away from this, can you give those to me in a quick synopsis?
Yeah, I think if you're working with, well, either buyers or sellers, be aware of financing requirements. If you're going to have people that have financing requirements on FHA or something like that, make sure that you don't get deep in the contract before you realize that it's an issue. Again, 1994 is a lot of the cutoff when replacement cost is no longer available. And if it is available older than that, it's usually quite a bit more expensive, like more expensive than a single family home in a lot of cases. So it's not ideal.
And,
That
forgive
would,
me, Greg, you're on the insurance side of things, correct?
I am, yeah. So just so like lenders will reach out, cool, we're doing the loan on this. I need, $140,000 coverage A limit on this 1992 mobile home. And it's like, okay, Citizens says the depreciated value of that's 55. I can do 150% of the depreciated value. So, I can do like 90,000 or, whatever that comes out to. So if they're going to require the 142, that's going to be a problem. We can go to that other company, but most of the quotes I see from them are like $3,500 a year.
Yeah.
And I haven't done one in quite a while, so that might not even be accurate anymore. So that would be one hesitation, is just making sure if the financing is going to require things that'll be an insurance issue. Occupancy, again, knowing the occupancy, if they're going to be vacant under renovation, it's going to be hard to find coverage. If they're going to use hard money loans and stuff like that, that can be an issue. Knowing that it'll pass 4 point, before you pay for the 4 point is good if you know what you're looking at. If you have, investors that are experienced, they usually know, hey, the roof's good, the plumbing's good, whatever. Oh, I thought it was in a slide, but I think I think I either removed it or didn't put it back in. Polybutylene pipes is an issue with a lot of the manufactured homes. Like I think it was the 80s and 90s that it was common. I think that was what the inspectors that I've talked to said.
Yep.
But a lot of the carriers, even Citizens, won't take polybutylene plumbing. So that
Basically, if
really
it
limits
has,
it.
and it has in this is from my experience, if it's not connected at all, but it shows up in a picture, they are gonna want a lot from you. So just get the plumber to remove everything. Laying
And
on the
Yeah,
ground underneath the home, don't let it be seen.
right.
is there an easy way to determine what polybutylene is? It doesn't appear to be in a quick Google search, but
Um, this is the way I explain it, and this is for the most part. If it's it looks like gray PEX.
okay.
So there was a class action lawsuit against it in the 80s. And it's not the actual plastic that goes bad, it's the copper little connections that go
Okay.
bad, but they don't care. If you could put all the shark bites that we know are amazing on it, but they don't care because it's that product that's bad.
It has been tarred with the brush.
Yes. So go ahead and get rid of it. What I have seen is sometimes people will just replace it coming into the home, and then underneath the home still has it. And you don't want that to show up because then Greg gives you bad news.
Yeah. A lot of times people ask, oh, what's this? I'm like, I'm not a technical inspector or whatever. I know if these boxes are checked, it's going to be an issue. And that's what the the carriers are looking at. As long as the report looks good and the pictures look good, then they're happy. I think those were the main things. Occupancy, we talked about that. Financing, we talked about that. Oh, and then the tie downs. So all the carriers will ask about tie downs up to the current code. A lot of inspectors can't do tie down inspections, so it's good to have some connections with inspectors that can or are willing to do that if you are going to be dealing with a lot of manufactured homes.
And
You
you
know,
can bring those up to code. I haven't done it a long time, but it was, depends on the size of it. Clarissa, maybe you have a more accurate quote, but it's about 3,000, maybe 3,500.
I was
If
gonna
it's a
say that
small
when we
single.
bought back in 2018, they needed to be updated and it was $1,200. And the last one a client did was 2,800.
Wow.
Yeah, so it depends on the actual size of how many they have to go and add in. So that's why there's not an exact quote.
Mhm.
Yeah.
Yeah,
And
that makes sense.
the seller's going to have to do that, before they can sell, right? I've never seen it where they give you the contingency to do it after closing. I'm not sure if either one of you've seen that.
Greg, do you write all over the state?
Yeah, we write all over the state, yes, sir.
And I
Quick
assume that
question.
your contact info is in this email, or I can look you up relatively easily.
Yeah, and give it right now, Greg, if you want, whatever the contact you want people reaching out to.
Yeah, so you got the link there. That'll be our agency card that has some general information about the agency, some good contact information, some investor resources, just a lot of helpful stuff there. Hopefully, has my phone number and email as well. But the phone number is 813-425-1626. And then the email is Greg M. So GREGM like Mike at thinksafeinsurance.com, all spelled out.
I think I got you on LinkedIn here.
Oh, cool.
Yeah. And
All
then
right.
I know, Clarissa, I know you have another question. I mean, I actually
Yes.
met Greg as he was an investor. And from me being the investor, that's one reason I like dealing with Greg because he can speak investor. He kind of knows what from my world, not just the agent world and the insurance world.
Yeah.
Definitely. I am trying to push for my business more the manufactured homes. And I have heard some people telling me that they're not safe, they cannot be financed, whatever. And the last person I talked to, he said, I thought the insurance is very expensive on those. What is your feeling about it? Do you think that's a common misconception as well?
Um, n- uh, I think a little bit. So I think that people expect the homeowner's insurance to be very cheap because they think, oh, a manufactured home is less expensive than regular single family. It actually is very similar pricing for owner occupied from what I've seen if you have wind coverage. And, I'm sure that so insurance is always based on a couple of things, but the frequency of claims and the severity of claims is always two of those things, right? Like if we have one claim that's 100,000 or if we have 10 claims that are 10,000, like in the end that all kinds of works out the same. But if we have 10 $100,000 claims, then they need to raise their rates and collect more money. So, I think me and Adrian have had this conversation before. I think a lot of these manufactured homes we're talking about are 1970s, 1980s homes. They're older. They're still here. They've been through a lot of storms. What's the big deal? Right. But
Yeah.
I think it's probably more of the severity, like when you get hit by a direct storm. We see the mobile home parks where it's just destroyed. Like you don't get a little bit of damage, you get a lot of damage. So the severity is very high. And, I think they just look at, hey, we can insure these single family homes that we know the walls are still going to be there. We might have some roof damage, whatever. We can take these manufactured homes where, it could be total loss. And I think that's why they look at the risk on the single family homes a little bit better, and so the pricing reflects that, right? The values are usually lower on the manufactured homes. The coverage limits are usually lower. but the price a lot of times is very comparable.
Mm.
From an insurance perspective, would you recommend manufactured home for first-time home buyers?
Um, I don't think that I would shy away from it. Um, my only thought on that is if it's older and they're first time home buyer trying to get FHA or first time home buyer
Mm.
type financing, that's probably going to be an issue. But if they're getting a 2016 manufactured home, there's going to be insurance options for that. If it's going to be primary occupancy, now if you think it's going to be $800 a year, that's not going to be the case. So as long as they've, have gotten quotes or have a realistic budget for what it would cost, I wouldn't shy away from it. I think that can be a great solution depending on, what a buyer's looking for. And I'm not an expert on that whole part of it, but just from the insurance standpoint, I don't think it would be a make or break deal either way, as long as you went in with realistic expectations on it.
Awesome, thank you.
Great questions.
I am extremely sorry that I missed the finance portion of this. So, and Adrian, we had a conversation. I don't know if you recall. It's probably been 2 years where I messaged you and I said, "Hey, man, tell me about financing mobile homes and how that works." And you said, "That's all covered in my book." So I bought the book. I've read the book, and I have forgotten everything I read.
I mean, the financing, I mean, sometimes the financing is a challenge because you can't get the insurance. And
Right.
then sometimes the insurance is a challenge because of what financing requires. So I feel like they always go hand in hand, and the inspection report is always hand in hand again between the two. Um, you know, me
So
personally,
what's I'm looking at and I cut you off, Adrian. I'm sorry. Um, I think where I struggle is, I do a whole bunch of residential, and it's very clear cut. Clean 4 point, ta-da. You're either insured or you're not. The carrier's working with you or you're not. But when it comes to mobile home, everybody you talk to says, "Look that way." Uh,
which is why I say you're right, send them here. Well, well, on that,
so
I
what?
mean, here, let me pause you real quick there, Jeremy. Greg, if we can get a mobile home with a clear 4 point, how hard is it for a um, owner occupant to get insurance?
To get insurance, it's not hard,
Yeah.
not taking the financing into consideration. I mean, we've gone through the hoops of citizens, like worst case scenario citizens, they're going to be difficult to get a policy with just because they're going to have, all of their hoops to jump through up front. But once you get the policy, they're good on claims. I've had a lot of customers with claims that have been happy with them. Um, and as long as the 4 points clean that meets underwriting guidelines, then like getting it is fine. Just takes a little extra work if that's the carrier that makes the most sense.
And just to catch you up, Jeremy, from what I believe Greg is saying with the financing part, if they're requiring $200,000 of coverage and the carrier will only give 125,000, now there's the problem. They may have to put a larger down payment or something in.
Gotcha.
Those are kind of how they keep dancing back and forth. 2 years ago, it was about 2 years ago when the insurance huge changed January 1st in Florida. Before that, I didn't ask questions about the 4 point items when I was buying something. I looked at it, I didn't really care. Now that is like my very first question. I am making offers on the MLS, and I'm asking basically the 6 questions because I'm asking the 4 point items and then well and septic. And I'm asking those as my first questions, even about the property, because my offers are very different. Because my
Sure.
offers are basically, well, am I going to get a private lender that cares about insurance? Or do I get one that doesn't care about insurance and they charge me different rates? Even though I
Sure.
can get financing regardless, but they have different risk and I have a different risk. So I have to pay less, on that older, like he said, like 1970s, that it's going to cost more to get it passing a 4 point than it's even worth.
Right.
Yeah.
Exactly.
Does that
Gotcha.
answer your questions there on financing, Jeremy, or did you have a follow-up question on that?
Well, I think, so here's the scenario. If I wanted to either move forward with a purchase or a cash out refi on a mobile home that I owned, the first step is going to be getting a 4 point and then having a conversation with you, Greg, correct?
Yeah, I mean, do you have insurance? Would you have insurance on it currently or no insurance currently?
No, bought it for a song and a dance and have slowly renovated it as I've had extra money. And it's almost there. I think we've been playing with it for 2 or 3 years. So, bought it cash, haven't insured it, about to figure out whether we're going to put the pony in the stable with the rest of the homes or trot her out to pasture and see what we can get. One of
Right.
the two.
I I would say first, before I paid for a 4 point, I would find out what the lender requirements are, and then how much coverage are you needing? Just
Okay.
because, if they go, hey, well, you're for that loan, you're going to need 180,000 in coverage, and then if the insurance for that's going to be $4,000 a year, you might go, never mind, not interested. If they say you only need 80,000 dwelling, like Citizens will do 80. I don't know what year. I didn't ask what year it was, but what year's the mobile home?
Shoot, I don't even know. I'd have to look it
Okay.
up.
Okay.
But probably 70s.
Yeah, so probably 70s. Citizens will probably, my guess would be 40,000 value. We can do 50% over that. So like 60,000 is going to be your coverage max with them.
Okay.
And so it'd probably be affordable in that case. But if the lender goes, we're going to require more, then we'll have to go to a specialty company that might have more requirements. There is a couple other, if it's your primary residence, there's a couple other carriers that might do it, but they don't take it with no prior insurance. And
Gotcha.
if it's an investment property, it's pretty much always Citizens.
Gotcha. Okay.
And by the year, it's highly possible that you won't be able to get a cash out refinance. Because I've been looking into that as well to help a couple clients. And with a double wide 86 and 1 acre of land, she couldn't get it.
Okay.
Wow.
Wow.
Yeah, it's a lender issue as
Well,
well.
and I think the other piece of the picture here is is yours, Clarissa? Is it in a, this is not in an urban area, and holy cow, there's a ridiculous range of what mobile homes are going for in this area. It's up in Sumter County. Um,
Mm.
and mobile homes right down the street go for 280, and then I'm embarrassed to tell you what we bought ours for, just a song. So I'm purposefully making it a broader range than it is, but so I don't know how to value it. I don't know how to, I'm struggling with all those questions. That's what so my first question when it goes moving to valuation would be, we'll get a lender involved, because at the end of the day, lenders want to know what it's valued at in order to tell you what to lend on it. So
So
that's
maybe that's a topic for a future one. I
Yes.
did a little bit. If either one of you have a legit good lender, bank lender for mobile homes, maybe I can bring them in to chat a little bit. I know I did one, but it was more on non-bank financing. Because
sure.
I want to do these every month, and if like, yeah, this is a little bit of marketing for me, but it's basically here's all the information for insurance on it. If Greg can't help you with your client, I could be a solution. Um,
Sure.
but with I'll give you the quick thing that could be, Jeremy, is what I've seen often is you have these comps that are all over the place. They're usually really high and really low and not so much in the middle. It's because a lot of times it's an investor buying for the song, as you said, at really low prices. And then sometimes that price, you're like, man, that is so high. Why is it that price? Because it's the investor reselling it on owner financing, not with bank financing. And they sell it a little above the market. So where we normally see the houses in the middle range with lots of comps because it's the same appraisers going over and over and over again, we don't always have that, especially in the older mobile homes. We get these two extremes, and it's usually because of those two entry and exits.
And they're registering the sales at higher than Because
A little bit higher because they're offering financing on a home that can't get financed and usually a person that can't get financed. And that skews the price. I usually hear people say they do about 20% higher. They should not be doing huge numbers higher, but that's usually a pretty fair, everyone's happy. So that's what I've watched skew the prices. And now those investors that are selling that way, if they're really transferring the whole deed over and everything, they either did this before or now they can't get insurance because of what Greg just explained about the values on it.
gotcha.
But they just have to take that risk because they bought it, like you said, at a super low price. And they're like, well, I only have a 20-30% of the money in it anyway. So if it fails, I didn't lose. I don't know. They're just willing to take that risk.
Sure.
Mhm.
The
So,
other thing when we're talking about values too, so insurance is always based on construction costs or the building value. It's not based on purchase price or things like that. I always use two kind of extreme examples. Like if you had a little shack on the beach, it might cost $100,000 to build it, but it might be worth $1.5 million because of the property on the beach. And then, vice versa, you could have a mansion in, I don't know, Detroit, and it could be $1 million to build. But if no one wants to buy it, no one wants to live there, the market value might only be, 500,000 or something. Obviously, those are two extremes. Here in Central Florida, they're usually pretty close, give or take a little bit. And so lenders usually won't make you do the property value, they'll make you do the construction costs. But where it comes into play on these mobile homes is they're happy as long as I'll write something saying that they have coverage up to replacement cost. And the carriers a lot of times won't do replacement costs, especially older than 1994. So I can't say they have coverage for the estimated replacement cost. And then they go, okay, I need this dollar amount. And it's like, well, we don't have enough to justify that dollar amount. So that's where you kind of get into issues sometimes on those older ones for that reason.
Gotcha.
Like it might
Gotcha,
appraise if your
Jeremy.
mobile home's on 10 acres, you might have a pretty high cash out refinance amount, but
Exactly.
the value of the mobile home may not be there.
Fair enough.
Just to finish, Jeremy, if you want to refinance, make sure you have the mobile home title. If it's not handy, maybe it's retired, but also make sure you have a hot plate, and that you also confirm that the house hasn't been moved. Because some lenders, they don't even touch it
You
if it
said
has
two
been moved.
things. You said also make sure you have a
Hot plate, HUD.
Okay. Don't know. I know when we bought it, they said something about retiring it and fixing it. So I guess it's retired and fixed. And it hasn't moved since we bought it or the prior owner bought it. So
That's good.
well, I appreciate all the questions, and I know the people that listen to the replay will appreciate questions. And usually we have a lot of the same questions as someone else asked. Make sure you reach out to Greg. So then if you have any mobile home insurance or any insurance questions for Florida, of course, I'm going to shamelessly plug myself. If you can't get something sold, I'm interested in buying it. And yeah, and I'm gonna continue these every month. Do some type of topic in the mobile home space. I also writing a little article. So if you're getting those, just hit reply, or if you have any ideas of future ones, something you're interested in learning, let me know, and I'll either create it or find the person that can answer those questions. So,
awesome. I appreciate you putting it together,
Thank you.
Adrian.
you're
Thank you,
welcome.
Greg.
Yeah, thank
Nice
you
to meet you,
guys. Thanks for
Clarissa.
the invite there, Adrian.
You're welcome. Thanks, Greg.
Have a good one, guys.
Mm.
See you guys.